Well, goodness me, lots of information from Rick Rule there. And knowing how much Rick likes gold, I've decided Meeka Gold Limited, Tim Davidson, the CEO, is here to tell you they have had some brilliant news out this week, but I'm not going to take away his glory. Tim Davidson, welcome to Virtual Gold. Over to you.
Good morning, Kerry, and thanks for having us here. It's fantastic to be with you this morning. Look, the company Meeka Gold, it's underpinned by a very large mineral resource. We've got the Murchison Gold Project in its obviously in the namesake Murchison province. It's a prolific gold producing region, and it's got fantastic access to infrastructure, and really we're surrounded. It's a strategic land position, and we're surrounded by very large gold producers. So we've got Westgold to the south of us. They've got a significant mineral processing or gold processing facility at MEK. They process 1.8 million tonnes per annum. And directly to the north of us is Superior Gold, the Canadians, with again a 1.8 million tonne per annum processing facility. So fantastic infrastructure in the region, roads, airport in MEK, and that will all benefit us as we look to put the Murchison Gold project back into production. And to that end, we released a scoping study in December last year that outlined an initial plan of over 400,000 ounces of gold produced, and a really good starting point or first a first study as we look to put this asset back into production. The second asset that we've got, the Circle Valley Gold Project. Now, you touched on it. We put out some fantastic exploration results earlier this week. 20 metres at 4.66, and that's within a broader intersection of 36 metres at 2.69, and that's very shallow. It's from 12 metres below surface, and that's the first RC drill hole to be drilled at the project. So we're really excited by it. It follows up on some work we've done over the last couple of years that identify a 400 metre by 1.2 kilometre gold in soil anomaly, and subsequent to that, we did some air core drilling that highlighted Tropicana style pathfinder elements. So really exciting project for us, and unexplored terrain. So that's got our geology team all hot under the collar.
So the things to take away there, ladies and gentlemen, is underexplored down at Circle Valley, and some really interesting hits, and they're only just getting started.
And finally, from a cash perspective, we're well funded. We've got $6.7 million cash in the bank at the end of the December quarter. So fantastic place to be. From a corporate perspective, a really tight register. The top 20 hold 38% of the register. Board and management are very well aligned with the rest of the shareholder group, in that they own about 10% of the company. The share price, this is a few days old now, but as of Friday last week, we closed at 4.2 cents, 920 million shares on issue. So about $40 million market cap. And look, with the strong cash position we've got, an enterprise value of slightly above $30 million. So we're very comfortable in terms of, or we feel we've got plenty of room to move with the fantastic assets that we've got in the Murchison, and certainly the greenfields exploration opportunity we've got at Circle Valley. That enterprise value we feel has plenty of room to move north. Now, Kerry, I'll just touch on the flagship asset for us is obviously the 1.1 million ounce Murchison Gold Project that we're looking to both grow the resource but also put back into production. And what I really want to draw your attention to on this slide is the location of our tenure, and specifically the Turnberry mineral resource, and to the south of that, St. Anne's. And the reason I want to do that is because we received some fantastic exploration results in January from St. Anne's, and really that's again an underexplored part of our tenure. So the results we received: 24 metres at 4.81, 36 metres at just over a gram, 8 metres at 2.66, and that's the first really intense exploration that we've done at St. Anne's, and we plan to follow that up with further work further drilling starting in late February or so, later this month. And what's important here is the mineral resource that we have on this project. St. Anne's doesn't have a mineral resource yet, but the grades we're seeing in that drilling are very much very similar to what we see at Turnberry. Turnberry's got a very large mineral resource, 610,000 ounces, It sits on the same shear zone as St Anne's, just to the north of St Anne's, and really from Turnberry going south towards St Anne's, that corridor, that shear zone, that shear zone has had very limited, broadly spaced drilling. So we see a fantastic exploration opportunity for the company to grow the resource, and that's what we're looking to do, and certainly with the drilling that we've got planned to start in late February at St Anne's. Now, I spoke briefly about the company looking to put the Murchison Gold project back into production. It's a project with strong fundamentals. The initial study, the study we put out in December, highlights a 50,000 ounce per annum production, both open pit and underground mining. Total production of in the order of 440,000 ounces, and importantly for us, it's a very high confidence plan in that 72% of that production comes from measured and indicated resources. So we're confident, we understand the geology, and we're confident in the plan that we've put forward. And look, it's certainly something that we're looking to build on, both from a mineral resource growth perspective, which will then flow into an improved mining plan. And in addition to the production that I just spoke about, the cash flow metrics, fantastic outcome in terms of free cash flow, over $180 million free cash, and that's using a $2,400 ounce Australian dollar gold price. So look, slightly below where we're at now, and certainly we feel that over the next few years that gold price is going to move materially higher. So it's a fantastic opportunity for us and for shareholders.
Tim, also with this area, this area, it was belonged to Doré before. Has there been a lot of infrastructure work? In other words, are you going to be much further ahead because you've taken on a project that's already had quite a lot of work done to it? Absolutely,
Kerry. So we're benefiting from a lot of that work that Doré did, and certainly Andy Well was a producing asset. So there's a significant amount of underground mine development there. There's a tailings facility there. There's a mill, albeit that we need to do some work to get it back up and running. But that's, that is insignificant compared to us having to go and build a new plant. Yeah. So that's fantastic. But in additional stuff, we look at Turnberry, which is a resource that has never been mined, hasn't had any underground or open pit mining. Doré did some fantastic work to prepare it for mining, and then subsequently didn't do any mining there. So they applied for and got a mining lease. They did hydrology studies. They did a lot of environmental baseline studies, heritage surveys. So we're benefiting significantly from the work that previous owners have done on the project, and it's a fantastic starting point from which we can bring it. Sorry to interrupt you, Tim. Does that bring your capex down? In other words, does it start to the economics, because of the work that's been done in the past, help you? Because Doré didn't make it work. Yeah, certainly. I mean, the thing with Doré is that they were operating in a significantly lower gold price environment. So they produced at an all-in sustaining cost. Well, their last financial year of production was $1,520 per ounce. The gold price was hovering between 1,500 and 1,600 Aussie dollars per ounce. So there wasn't a big margin there for them. The work we've done outlines a mining plan with all-in sustaining costs sitting at around $1,600 per ounce. So very similar to what Doré experienced when they were actually operating. But the benefit we've got is a significant tailwind to the gold price over the last couple of years. So the margin now is materially higher than it was when Doré was operating. And in terms of the work that Doré did and how it benefits us, well, obviously having a plant there, having waste dumps, tailings disposal facilities, a lot of that, bore fields, and at Turnberry in particular, a lot of the environmental baseline studies and heritage surveys, mining lease applications, absolutely those things bring down our initial capital requirements. So it's a fantastic project with a lot of work done prior to our ownership that we can leverage, and that expedites the process for us as we look to get it back into production. And in terms of cost for us to get back into production, it's very modest. We specifically set the plan up to limit the amount of upfront capital we'd require. So $52 million is our estimated initial capital requirement. really, you can see on this slide, this highlights the project cash flow metrics, or a number of metrics for the project contemplated by the scoping study at various different gold prices. And you can see it's highly levered to the gold price. So every $100 Aussie dollar rise in the gold price adds another $40 million free cash flow to the project. So it's a fantastic project for us, and we're really excited as we work.
Say that once more. I mean, I really want people to soak this in. Every $100, ladies and gentlemen, every $100 ounce rise in the gold price adds 40 million.
That's right, Kerry, and that's not a $100 US rise in the gold price per ounce. That's Aussie. So look, it's highly levered to gold price, and the initial project that we contemplate had we're producing 400,000 ounces, slightly over 400,000 ounces. The mineral resource is 1.1 million ounces. So we're really producing, extracting less than half of that mineral resource. And the fantastic thing for us is we see an opportunity to extend the mine life and certainly grow the resource from drilling, from underground drill platforms as we develop the mine and grow the resource that way, rather than having to drill deep holes from surface. So it's a fantastic starting point for us, but certainly we see upside in that plan as we get into production. Really, what I want to talk to on this slide is the way we approach establishing the mine. We started off with the Andy Well mine. There's a significant amount of development there, so we've got a head start in that regard. It's a well understood ore body. It's very high grade, so we can pay back that startup capital very quickly. And really what we want to do is use cash flow from operations. So establish the mine using limited or a modest amount of capital, and then use cash flow from operations to develop subsequent mines. So use cash flow from Andy Well to mine the pits, or to establish the pits at Turnberry, and then subsequently build the underground mine at Turnberry. Now, Turnberry is a fantastic opportunity for us, and what I mean by that is that there's a very large portion of the resource that we specifically haven't included in the initial mine plan. And that's a function of confidence. So we wanted to include the highest confidence mineral resource in the mine plan. And outside of that, there's a significant number of really high grade drill hits and certainly grades that are amenable to underground mining that aren't in that initial mine plan. And you can see there, the two I'll draw your attention to is the 4 meters at just under 50 grams per tonne, and on the bottom of the screen, 7 meters at just over 40 grams per tonne. Outside of that, there's a lot of grade that is amenable as well to underground mining. So a meter at 18.9, 2 meters at 9.64, 3 meters at 9.63. So there is a lot of material that we can bring into the plan that isn't currently captured in that plan. So the message I want to get across is we see an opportunity to grow the resource with work while we're mining.
Fantastic. Now we've got a couple of minutes left. This is is this one? Yes, Circle Valley.
Yes. So this is the Greenfields project for us that we've got down near Esperance. Look, we put out some results earlier this week, and really, we're really excited by a number of things. One is the size of the gold anomalism. It's a 400 meter by 1.2 kilometer gold in soil anomaly. We did some air core drilling last year and intercepted some very broad mineralization in the regolith, and then this year, at the start of January, we went in and drilled our very first RC drill hole and intercepted 20 meters at 4.66 within a 36 meter at 2.7 gram per tonne interval, and that's basically from surface, so from 12 meters. So really excited. We control just under 170 square kilometers. It's gneissic rocks down there, and what the other really important thing that we see is the end of hole multi-element analysis that we've done, and a lot of that the metal enrichment that we see in that analysis points to Tropicana style pathfinders. So the
just about out of time, so show me that last slide if you wouldn't mind, Tim.
Yeah, no, that's sorry, Kerry. So really what we've got here is on the top of the top slide there is a section, an early section through a Tropicana. And what you see on the bottom is Circle Valley, and really, Tropicana was a large gold in soil anomaly, strong pathfinder metal enrichment, thick zones of gold mineralization below the regolith, and ultimately a very large mineral resource. And we tick a number of those boxes. So we've got a very large gold in soil anomaly there. Strong pathfinder enrichment that aligns very well with what they see at Tropicana or saw at Tropicana. Thick zones of gold mineralization in the regolith. Our first RC hole drilled, a very broad, high-grade intercept from surface effectively. And look, we're very excited by this project. It's early days, but certainly has all of the hallmarks of a fantastic opportunity for us.
It's along the same sort of trend. Listen, Tim, I could talk to you for another hour. I can't. Great to see you. Come to the Zoom networking at the end of the day. Ladies and gentlemen, you can ask him all the questions there, but look at that. What a great money shot, Tropicana versus Circle Valley. Tim Davidson, CEO of Meeka Gold. Thanks for joining me today.
Thank you, Kerry.